wonder what would happen if Tesla, I don't know, bought $1.5 billion worth of Bitcoin and started accepting Bitcoin for their product? Hold up. Okay, so the Tesla news has been breaking the interwebs today, but let's take a moment and really break down why this is such a big deal. A lot of the price action we've seen so far this year has been in large part credited to institutional buying, and Michael Saylor, the CEO of MicroStrategy, has been one of the biggest champions of this, showing other companies that you can take assets that are depreciating, like cash, and turn them into something that is a much better performing asset like Bitcoin. But even though this institutional ball has been rolling and gaining momentum, so far we haven't really seen like the top dogs, the Fortune 500 companies jumping in to add Bitcoin to their treasury. But now, with Tesla jumping in, and I don't just be jumping in a little bit, they converted 10% of their treasury to Bitcoin. It's essentially giving permission to these other companies to follow suit and do the same. Where before they might have worried what shareholders would think of them taking such a risky move, but now Tesla's done it. Elon's on board. It basically helped to de-risk Bitcoin as an asset in the eyes of these companies. But the other thing, and I haven't seen a lot of people talking about this yet, that is a huge part of this, is the impact this could have on future potential regulations within the cryptocurrency industry. The bigger and the faster this goes, and the more companies add Bitcoin to their balance sheets, the more difficult it's going to be for governing bodies to put restrictive measures on Bitcoin. Because at this point, any action that they take would not only impact retail investors, but big companies and their treasuries as well, which is something that regulators are likely to be much more cognizant of. It also means our bench is growing deeper and the advocates for Bitcoin are growing bigger and stronger.